how can a buyer improve their chances of getting a better rate? Like, are there things that they can do, work on their credit score to get a better fixed rate?
Credit is definitely very important in getting the best interest rate. It really can make or break a deal for them. So paying attention to their credit, and if they have a variety of credit, that helps as well. So having different types of accounts on their credit report is very important.
Okay.
You don't want to have all credit card debt and nothing else. So you want to have a variety of maybe a car loan or student loan and credit card. So different types of debt is going to help improve their credit.
Okay.
And the longer they have debt out there helps improve the credit as well.
Okay.
And obviously paying bills on time. I mean, that's number one.
Yeah.
No late payments, no collections, no judgments, and the time of history that they have on their credit is going to help improve and get the best interest rate.
I didn't realize that the different types, like I just assume like debt is debt, right?
Right.
And so that it would all have an impact on your credit. But is there a better type of debt to have? Do you know what I mean? Like
it's really a variety of debt is what gives you the best credit score.
Okay.
Because they want to see that you can manage the different types of debt. So credit card debt where you have money available to you to draw and then repay, that's important. Plus paying installment debt like car loans or student loan debt on time. So just that variety of debt is really what boosts that credit score.
That's interesting. I guess I just never realized that. What does the timeline look like as far as what can they do to start to prepare on their credit score?
We advise people to just pay attention to their credit. And you can do that by getting your free credit report once a year from annualcreditreport.com.
Okay.
Right? Not the commercial of freecreditreport.com that you hear the jingle on TV, but annualcreditreport.com. It is for consumers. Once a year, you can see your credit report from all 3 nationwide agencies, so Experian, Equifax, TransUnion, and then they can just see what's out there. Make sure it's all valid. Make sure there's nothing out there that's not theirs. Review if there's late payments. Are there debts that weren't paid, that need to be paid. So just paying attention to your credit for sure on an annual basis is very important.
And so you made a differentiation. Like, are there some credit reports that you can run that affect your credit? Like, does this certain credit report, it doesn't make an impact on your credit?
Right. It's called a soft inquiry, so it does not show as a hard pull on your credit.
Which is important, right?
Yes.
And it's always amazed me how the 3 credit reporters, they're all so different.
They are.
Do you know how that works?
They all have their own credit score modeling somehow in the background. So it takes into account of how much revolving debt does somebody have, what are the balances versus what's available, what's their history been. So they put different weighted averages on the different types of debts out there, and they get 3 different credit scores.
Very different.
Why that, I don't know. Doesn't make sense, but they all have their own little modeling behind the scenes.
It's good to have 3 things to look at, right?
Yeah.
Because you want consistency, but it's just amazing to me how they're all so different.
They're different. And there are some debts out there that only report to one and maybe not others.
Oh, okay.
So we've found like Quick Trip only reports to TransUnion.
Okay, who would have thought?
Credit rating is going to be different than
Sure.
Experian and Equifax because they don't know about that debt and that history out there.
Crazy.
So,